Hey everyone, welcome back to Corporate Decoder. Today Worksport Ltd just filed an 8K reporting a CFO change, and I am seeing one key detail that could point to future stock activity. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is bringing in a new financial leader, and it looks like they are stacking some serious equity before even officially starting the new role. So Worksport Ltd, that is the company we are looking at today, and they just updated investors on a couple of important personnel changes. It seems like their chief financial officer, Michael Johnston, has decided to step down. He was the main person in charge of the company's finances. His resignation is effective this very moment, the 30th of April. 2026, the company states this wasn't due to any disagreements about how the company handles its money or its operations, which is generally good to hear. They are expecting to bring their finance department entirely in-house, which could signal a more centralized control over their financial reporting and strategy. Now, the big news here is who is taking over. Jennifer Kartychak has been appointed as the new Chief Financial Officer, starting May 1, 2026. She has been with the company since January as the Vice President of Finance. Before that, she was a consultant through her own firm and advisory group from August 2023. This means she has had a pretty hands-on look at Worksport's finances even before being officially in charge. Her background is strong. She has a decade of experience in public accounting with about 5 years at Ernst & Young, a major accounting firm. She even reached a manager position there, dealing with audits and assurance services. This is the kind of experience you want in a CFO, especially when dealing with public company reporting. She also spent time at Moog Inc. after leaving E, where she gained experience with CSE reporting, managing acquisitions and divestitures, and working closely with executive management. That's a solid resume for taking over the financial reins. This is where it gets really interesting, especially for investors. Back on the 1st of January, when she first joined as VP of Finance, she entered into an employment agreement. This agreement outlines her compensation, and it includes some pretty significant stock options. She's getting a base salary of $220,000 and a bonus target of $75,000. But the key takeaway here is the stock option grant, an option to buy up to 100,000 shares of Worksport's common stock. The price she'll pay for these shares is the fair market value on the day she was granted the option. These options generally vest over time and based on achieving certain company goals, and it doesn't stop there. The board also approved a separate grant of actual shares to her consulting company and advisory group, which she wholly owns. They are issuing 13,000 shares of common stock to And Advisory Group. This means that as the new CFO, she has already been awarded a substantial amount of equity, both in the form of options and direct shares, even before officially taking the CFO title. Looking back at her consulting fees, Worksport paid her firm around $8,000 in 2023, then a much larger $134,000 in 2024, and $158,000 in 2025. The payments continued into 2026, with about $17,000 paid through the 29th of April. This shows a significant increase in her involvement and the cost of her services leading up to this appointment. It is also worth noting that her firm received nearly 20,000 shares of common stock for services rendered between August 2023 and December 2025. So we're seeing a pattern of significant equity grants to Ms. Kartychak and her associated entities as she transitions into this key executive role. This is a common practice to align the new executive with the company's performance and to incentivize them, but it also means she has a vested financial interest in the company's stock price performance from day one, based on those stock options. All the details of her employment agreement are filed as an exhibit, so if you want to dive deep into the specifics of her contract, including the vesting schedules and performance metrics for those stock options, that is available for review. So what does this all mean? The departure of the old CFO and the immediate, very strong equity stake for the new CFO. This is often a signal that management is trying to implement a new financial strategy or perhaps prepare for significant corporate actions. Having someone with deep accounting and SEC reporting experience stepping into the CFO role is typically viewed positively by the market, as it can reassure investors about the accuracy and transparency of financial reporting. The fact that she is coming in with such a substantial equity award, including 100,000 stock options, tells us the board wants her heavily invested in the company's success. This kind of award could be seen as a commitment from her to the company's future growth, and from the company to her leadership. It is a way to tie her compensation directly to shareholder value. Now, comparing this to other CFO transitions, it is not uncommon for new executives to receive equity grants. However, the combination of direct shares for her consulting firm and a large stock option grant for herself, all happening right as she steps into the top finance role, is noteworthy. It suggests a robust compensation package designed to attract and retain key talent, and to ensure her financial success is directly linked to the company's stock performance. We have seen companies like smaller tech firms, for example, use significant equity grants to attract executives who can steer them through challenging periods or toward growth. In such cases, the long-term investor outlook often hinges on the executive's ability to leverage this ownership stake to drive shareholder value. For Worksport, this could mean an intense focus on profitability, efficiency, and potentially future financing or strategic transactions that could boost the stock. My biggest concern is whether the company's current financial health can support the ambitions tied to these equity awards. While the CFO brings valuable experience, the underlying business performance will ultimately determine if those stock options become valuable. What I am actually looking for is how these new financial strategies translate into tangible results and improved financial statements in the coming quarters. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.